Get ready for a clash of AI titans.
Yeah.
Today, we're unlocking the ultimate battle for your portfolio, Palantir versus Nvidia. We're talking about two companies really shaping the future of artificial intelligence, with explosive growth and, well, pretty surprising market dominance sometimes. You might be surprised by some of the numbers we uncover. Seriously, you won't believe some of these. Stick around.
You're with Channel S. This is your analysis. And before we dive deep into the fascinating details of this high-stakes showdown, it's really crucial to understand a key foundational point. Like, this analysis, it's purely for informational purposes. Yeah. It is not personalized investment advice, okay? You should always consult a licensed financial advisor before making any investment decisions. And just so you know how we got here, this deep dive combines AI-powered data mining, comprehensive web research, and expert market analysis. We believe all the data is accurate as of publication, but, no liability is assumed for errors or, importantly, investment losses. Past performance doesn't guarantee future results.
That sets the stage perfectly. So we've compiled this comprehensive report on Palantir and Nvidia, these two absolute powerhouses at the forefront of AI. Okay, let's unpack this first bit. We hear AI investing thrown around a lot, but what does it actually mean? Like, for someone looking to put their capital to work?
Right. So AI investing, it essentially means allocating your capital to companies that are either, developing, manufacturing, or significantly leveraging artificial intelligence technologies. And this isn't just software we're talking about. It includes firms creating those core AI software platforms, yes, but also those manufacturing the crucial high-performance AI chips, or even companies that are profoundly transforming your own business operations, their competitive advantages through AI adoption. It's pretty broad.
We're seeing such a massive surge of interest in AI right now. It feels like it's everywhere. Right. What are the undeniable signals that make this moment, like right now, so pivotal for investors? Why now?
Because the sheer scale of the market shift is, well, it's truly remarkable. The AI market is projected to skyrocket to, get this, $1.8 trillion by 2030.
Wow, $1.8 trillion.
Exactly. And we're witnessing every major industry integrate AI solutions, plus government spending on AI. That's set to exceed $300 billion by 2030. The U.S. Department of Defense alone awarded $200 million in contracts recently. This isn't just a fleeting trend, It's a monumental systemic shift happening.
Okay, now for our two main players. Let's picture them as two very different kinds of giants in this AI world. For anyone just starting to wrap their head around this landscape, how should we think about Palantir? That's ticker PLTR.
Okay, Palantir. Think of them as trying to provide the iPhone moment for AI software. They specialize in helping massive organizations, governments, complex corporations make sense of incredibly disparate and, frankly, complex data using their AI platforms like Foundry and Gotham. It's often viewed as a high-risk, high-reward kind of proposition. Definitely has explosive growth potential because of its innovative approach, but yeah, riskier.
High risk, high reward. Got it. And Nvidia, the other contender in this AI battle, how do they fit in?
Nvidia is, well, it's more like the electricity company of AI. Almost every single AI application, from the most cutting-edge research to the latest consumer tech you use, it fundamentally relies on their powerful chips, their GPUs, to operate. This makes them a more foundational, predictable revenue stream. It's seen as a safer, though still high-growth infrastructure play within the whole AI ecosystem.
Okay, so the core insight for you listening, the main takeaway here, seems to be recognizing that Palantir and Nvidia aren't just interchangeable AI stocks. They represent two fundamentally different bets on the future of AI. One's on the bleeding edge application software, the other's on the indispensable underlying hardware. Understanding that distinction is probably your first step to intelligent allocation.
Yeah, exactly. One's the brain, potentially. The other's the raw power. Different risks, different rewards.
Right. So beyond the individual companies, what are the big picture forces, the grand currents propelling this entire AI market? What macro drivers and sector trends are really pushing this boom?
Well, as I mentioned, the global AI market itself is already huge, around $279 billion in 2024. But that projected growth, an astonishing 35.9% compound annual growth rate, CAGR, to reach $1.81 trillion by 2030. That's just monumental.
It really is.
And tied to that, we're seeing a massive semiconductor boom. The industry is projecting maybe $697 billion in 2025 sales, potentially hitting $1 trillion by 2030. And crucially, enterprise adoption of AI chips alone exceeded $125 billion in sales last year. They're forecasting over $150 billion in 2025. The demand is just immense.
Those market projections really paint a vivid picture. Just the scale of this opportunity is mind-blowing. And look, if you're finding this level of insight helpful for making sense of all this complex information, empowering your own decisions, then you'll definitely want to make sure you subscribe to Channel Vest wherever you get your deep dives like this one.
Okay, let's get to the part everyone watches closely, the numbers. How have these two giants actually performed in the market? We're looking at data as of July 21, 2025, just for context.
Right. The performance snapshot, Palantir, PLTR, is currently trading around $153.52. Now, its performance, it's been staggering, frankly. It's up a remarkable 103% just year to date. And get this, an incredible 434% over the past year.
434%. That's insane. It is. Its 52-week low was just $21 in 2023 as compared to its recent high of $155.68. Huge run-up.
Okay, wow. And Nvidia, how does NVDA stack up?
NVIDIA is at $172.41. It's had a robust year, too, up 28% year-to-date and 41% over the last year. Solid numbers. Its 52-week range is from $86.62 up to $174.25. So strong performance, but not quite the explosive move Palantir had.
Right. And just for context, the broader market, like the S&P 500, is up about 14% year-to-date and 18% over the year.
So yeah, the undeniable takeaway from the performance numbers is Palantir's explosive surge. It's just significantly outperformed both Nvidia and the broader market recently. But here's the real insight, I think. That kind of parabolic growth, rocketing up so fast, it usually comes with significant underlying volatility baked in. And huge market expectations. It's not just a number. It tells a story about investor appetite for risk right now.
Absolutely. And that kind of meteoric rise, 434% in a year, it inevitably begs the question of volatility, doesn't it? How do these two compare when we dig into their technical indicators, the volatility metrics?
It certainly does. Palantir has a beta of 2.59. Now, beta, think of it as a measure of how wild the ride might be compared to the overall market, like the S&P 500, which has a beta of 1. So a 2.59 beta means it's extremely sensitive. It swings significantly more with market movements, both up and down.
Much higher highs, potentially much lower lows.
Exactly. Plus, it's trading well above all its major moving averages, the 50-day, 100-day, 200-day. Those are basically lines tracking its average price over different periods. Being above them signals strong recent upward momentum. But look at its 52-week range, a massive 634% price spread between the low and the high. That tells you about the volatility.
Wow, 634% spread.
Yeah.
Okay. And Nvidia, our sort of more foundational play, how does its beta look?
Nvidia's beta is 2.14, so still elevated, meaning it's more volatile than the market average, but it represents, let's say, more controlled volatility compared to Palantir. It's also maintaining support above its 50-day moving average, which is generally a positive technical sign, and its 52-week range had a more contained spread of 101%. Still volatile, but not quite the roller coaster Palantir has been.
Okay, so the technical insight is basically Palantir is designed for a wilder ride, requires a stronger stomach, maybe, while Nvidia, though still volatile because it's tech and AI, generally offers a bit more stability within the sector.
That's a good way to put it.
All right, we've seen their dazzling performance, the momentum. But the real test often comes when you look under the hood at valuation. This is where the story gets incredibly nuanced and, frankly, maybe a bit unsettling for one of our contenders. And this is where it gets really interesting. What do the PE and PS ratios tell us?
Yeah, valuation is, well, it's crucial. And Palantir's metrics here are indeed extreme. Its price-to-earnings ratio, the PE, which compares share price to earnings per share, is a whopping 670.
Yep, 670. Yep.
So it's in 70. And its price-to-sales ratio, or PS, often used for high-growth companies that might not be highly profitable, yet stands at 114.
Okay, wait. Put that in context. How does that compare to Nvidia or even other big tech?
Great question. Nvidia is at a PE of 55 and a PS of 26. Much lower, though still high for a traditional company. And even established tech giants like Microsoft, for example, are currently around a PE of 38 and a PS of 12.
So Palantir's PS is nearly 10 times Microsoft's. And its PE is, well, off the charts compared to them. Those valuation numbers for Palantir are truly staggering. What's the historical context here? Does such an extreme PS ratio like 114 ever actually resolve favorably for long-term investors? Or is it just a massive flashing red light for caution?
Yeah.
I won't believe how high these numbers are.
It means Palantir's extreme multiples reflect immense market expectations for sustained, like, hypergrowth. It's as if the market is betting they'll keep growing at light speed, consistently, far into the future. Which of course means any hiccup, any sign that growth might slow down could lead to a really big disappointment for investors and potentially a sharp correction in the price. And here's the critical part. Based on market history, Historical analysis shows that even market-leading tech companies rarely sustain such incredibly high PS ratios, like over 100, over the long term. It's a very, very high bar they need to clear consistently. This is a crucial point for you to internalize if you're looking at PLTR.
Okay, that's a vital reality check. Given these high-stakes numbers and expectations, what are the professional analysts saying? And who actually owns large stakes in these companies?
Yeah.
Where's the big money?
Right, analyst sentiment. For Palantir, the average analyst target price is currently around $91.37. Now, given its current price, around $153, that implies a significant potential downside, like magical 40.48% return from here, according to the consensus. Mizuho Securities, for instance, noted something like Palantir's valuation remains a concern despite strong commercial growth. So, acknowledging the growth, but worried about the price.
Okay. And for Nvidia?
For Nvidia, the average target is $181.22. That implies a more modest but still positive potential upside of about plus 5.11% from its current price. And reflecting that, Bank of America stated something along the lines of, Nvidia's dominant position in AI infrastructure justifies a premium valuation. So analysts seem more comfortable with Nvidia's current price level, relatively speaking.
Interesting contrast. And what about institutional ownership, the big funds, the pension plans? Where are they placing their bets?
Palantir actually has very high institutional ownership, around 85%. That's quite significant, compared to Nvidia's, which is also substantial, but lower at 65%.
85% for Palantir. That's high. What about recent flows? Has money been moving in or out?
Good question. Looking at net flows in Q2 2025, Palantir actually saw accelerating inflows, especially in June, where inflows were up 176% compared to April. For the whole quarter, it totaled about plus $6.84 billion in net inflows, so institutions were buying more. Nvidia, meanwhile, had consistently strong inflows throughout the quarter, totaling even more at plus $10.94 billion. This suggests pretty stable and significant institutional confidence in Nvidia as well.
Okay, so institutions hold a lot of Palantir, and we're buying more recently, despite the valuation concerns analysts have. Interesting dynamic. Now, every investment, no matter how promising it looks, carries inherent risks. What are the key factors, the potential downsides that you should absolutely be aware of for each of these companies?
Definitely. For Palantir, the primary risks really circle back to a few key things. First, that extreme valuation we just hammered home, it leaves very little room for error. Second, significant competition. Big tech companies, the Googles, Microsofts, Amazons of the world, they are developing similar data analytics and AI platforms. That's a real threat. And third, there's a dependency on government contracts. Over half, more than 50% of Palantir's revenue still comes from government deals. That creates concentration risk. If a few big contracts aren't renewed, it could really impact their top line. Plus, it just absolutely requires near-flawless execution on its commercial expansion strategy to even begin justifying that current valuation and meeting those sky-high growth expectations.
Right, high hurdles. And for Nvidia, the perceived safer play, what are the primary concerns there?
NVIDIA's risks are different but still important. One is increasing competition, but maybe from a different angle. Some of their major customers, like Google and Amazon, are actually developing their own internal AI chips called ASICs.
So their own customers might become competitors in a way.
Potentially, yes. Especially for specific internal workloads. This could erode some of NVIDIA's dominant market share over time, or at least cap its growth in certain segments. And then there are always the cyclical market dynamics inherent in the semiconductor industry itself. It's historically been prone to periods of boom and bust, oversupply and undersupply. That cycle risk is always present. These are vital considerations for both.
Okay, definitely things to keep in the back of your mind.
Yeah.
So pulling this all together, what does this actually mean for your portfolio? How should someone approach maybe integrating Palantir into their investment strategy, given everything we've discussed?
Well, based on this analysis, Palantir is suggested more as a, let's call it, high-risk, high-reward satellite position. Think of it as a smaller speculative bet specifically for AI software exposure. Given its volatility and risk profile, the suggestion is to limit it to maybe 2 to 5% of your total portfolio. Keep it contained. Entry points. The analysis suggests looking for entries below $120, with maybe more caution needed between $120 and $140, and an exit trigger. Something to watch for might be if that crucial commercial revenue growth starts falling below, say, 25%, or if those competitive threats we mentioned really start to intensify and show up in their results.
Okay, satellite position, 2-5%, watch growth and competition. Got it. And for Nvidia, the electricity company of AI, how does the strategic approach differ there?
Nvidia is viewed more as a potential core technology holding for balanced AI exposure. It's generally seen as suitable for a slightly larger allocation, maybe in the 5–10% range of your portfolio, depending on your overall tech weighting. Suggested entry might be below $160, with similar caution advised between $160 and $180 given its run-up to an exit. Things to monitor would be any significant signs of margin compression, meaning their profitability per chip is shrinking, or, of course, evidence of significant market share loss to competitors or those internal chip efforts. And look, whether you're a beginner investor just dipping your toes in or a seasoned professional managing a complex portfolio, there are specific questions you should always ask yourself before making any moves in this really dynamic AI space.
Right, so for those maybe just getting started, grappling with all this info, what's the crucial first step? How should they assess these opportunities?
First and foremost, you need to honestly assess your own risk tolerance. Palantir clearly requires a high tolerance for volatility and potential loss. Nvidia, while still volatile, generally offers more stable AI exposure within the sector. Be honest with yourself about what you can handle. Also, consider your time horizon. Both these stocks generally require a longer-term view, probably 3+ years at least. But Palantir, given its growth story needs time to play out, probably demands even longer, maybe 5+ years.
Good point. Patience is key.
Definitely. And always, always limit your position size, especially with volatile stocks. The suggestion again, Palantir 2-5%, Nvidia 5-10%. And critically, diversify within your AI exposure. Don't just bet everything on one or two names. Spread it out a bit.
Sound advice. And for the more experienced investors tuning in, the pros out there, what deeper metrics or trends should they be constantly monitoring?
For the pros, it's about digging deeper into the quality of the revenue. For Palantir, that means tracking the mix. How much is commercial versus government revenue? Is that commercial side growing fast enough? For Nvidia, keep a close eye on that crucial data center growth rate. Also, assess the competitive moats. Are they widening or narrowing? For Palantir, look at deal win rates against competitors. For Nvidia, track market share trends very closely. Are they holding that 80% dominance? Analyze margin trends. Are they expanding or contracting? And importantly, try to model out potential valuation paths. Evaluate the sustainability of those PE and PS multiples we talked about. Can the growth realistically support them long term?
Okay, lots to track for the serious investor. So boiling it all down, what's the sort of optimal strategy framework that emerges from this whole deep dive? Is there suggested balance?
While the report does suggest a potential best-case allocation framework aiming for a balanced approach to the AI sector, it proposes maybe a 60% weighting towards Nvidia and 40% towards Palantir. But importantly, it also highlights that if you were picking just one stock based purely on fundamental strength and more conservative risk profile today, Nvidia would likely be the preferred choice based on its established dominance and financials.
Right, interesting split. 60-40 Nvidia Palantir for balance, but Nvidia favored on fundamentals alone. Makes sense. And hey, if you want more exclusive insights and real-time updates like these to help inform your own thinking, make sure to subscribe to Channel Invest and definitely turn on those notifications. It's a great way to stay ahead. So let's wrap this up. What are the absolute core takeaways, the must-knows from this deep dive into Palantir versus Nvidia? For Palantir, it seems to be all about that explosive growth potential, right? We saw 39% overall revenue growth, an incredible 71% U.S. commercial expansion, and improving profitability metrics. Huge potential. BUT. That's a big but that comes with extreme valuation risk. That PS of 114, the PE of 670, those numbers require near perfect execution just to justify, let alone grow into. Nvidia, on the other hand, it represents market dominance and really strong cash flow. They boast something like 80% GPU market share for AI, 69% overall revenue growth recently, and an impressive $64 billion in annual free cash flow. That's a powerhouse.
Absolutely. And the key data point I'd say you need to monitor closely for Palantir going forward is definitely its commercial revenue mix and growth rate. Specifically that U.S. commercial revenue growth, currently at that strong 71%. Can they sustain it? And also keep an eye on their government contract renewal rates for any signs of slowdown.
Perfect. So given Palantir's incredible momentum, but frankly eye-watering valuation, and Nvidia's foundational dominance, but facing intensifying competition, the real question for you, the listener, boils down to this. Are you betting on the iPhone moment, the potentially revolutionary bleeding-edge software that's disrupting industries? Or are you betting on the electricity company, the essential underlying hardware infrastructure that powers it all? And maybe more importantly, how much risk are you truly willing and able to take on for that future? We really hope this deep dive gave you a powerful shortcut to being well-informed on this critical AI battle.